What's up everyone, it's Karthik with MoneyVest. So very strong close for the markets, pushing higher with the NASDAQ up a little bit over 1.1%. We had the S&P 500 also pushing up 1% and the Dow Jones rolling over just a little bit. We had very strong inflation numbers come out as the core PCE was only up 2.6% on a year-over-year basis, which was lower than the consensus expectations at 2.7%. So you can actually see that on the website called Econ Day. Eventually, all of this content is going to be available on our very own website at moneyvest.com. But if you come over to the PCE numbers here, this right here, 2.6 number, is the number that we're focusing on, which was lower than the consensus of 2.7. And the market's, of course, seeing a very, very nice, strong recovery and rally on the day, with very nice moves to the upside. Portfolio was up a little bit over $7,000. This is the long-term portfolio and options portfolio. You guys already know that I closed out all of my puts from last week on Nvidia with a nice 95 to 97% profit. So much so that I actually sold new puts. There's a new trade that I've already placed for next week. So again, if you want to get access to those alerts, link's going to be down below. These right here are my Tesla calls, closed for 74% profit. And this right here is a brand new video that I posted for all the members. This is the options portfolio update for the week number 2. So for second week, which is the coming week here next week, I posted. It's going to be a shorter week. Monday is markets are closed for Labor Day. But this right here, options trade that I placed today, alerts go out every Friday. And this is already up 38%. So it's actually quite crazy that we are already up 38% on the puts that we have sold for next week. So it's possible that I end up closing this trade earlier, say Tuesday or Wednesday when the markets reopen, if of course we continue to see that momentum higher. So again, join the Discord, join our Patreon. It's August 31st here in Georgia because it's way past midnight. So 2 more days left for you guys to take advantage of that 16% annual discount if you are interested in joining us and of course becoming a part of our community and access all the Discord channels, all the members only private videos. There's a lot of educational content also available on Patreon under MoneyVest Education. So if that's something you're interested in, again, link's going to be down below. So very, very strong move to the upside. $182 billion added by Magnificent 7. There was only one stock that was lower on the day, which was Apple, slightly down about 34 basis points, but everything else was pushing up. The most market cap added by Amazon, 3.7% higher, almost $67 billion in the green, followed by Nvidia, which was up 1.5%. And then we also had Microsoft pushing up almost $30 billion. So all in all, $182 billion added by Magnificent 7 and almost $500 billion addition by S&P 500, right? So very strong gains for S&P 500. And if you do the math, again, if you take a look at 182 billion divided by the 495 billion, that is not that much. We're only looking at 37% contribution from Magnificent 7. That means over 63% of the market's momentum today came from other parts of the market, so other sectors. If you come over to the TradingView chart, this right here is our sectors watch list. So this is going to be the sectors, different sectors that we are keeping track of. And you'll notice that XLK was up 1.3%, but we did have discretionary pushing up 1.5%. And then we had materials, industrial, real estate, all of them up close to 1%. Financials up close to 1%. Staples up 79 basis points. Utilities, healthcare, communication services, energy, everything was green. So all 11 sectors in the S&P 500 pushing higher. So a very, very strong day. So if you come over to the groups, you'll notice that every single sector was higher except for energy, which was slightly lower, but XLE was still green here on the day. And this right here is the last 1 week's performance. Last 1 week, technology, cyclicals, and comm services still struggling a little bit, but financials is up over 2%, and other parts of the market continue to push higher as well. So very, very nice, almost $500 billion gain for the market, and 37% of that coming from Magnificent 7 stocks. Coming over to seasonality, and before we get into seasonality, I want to introduce and make an announcement that we have now finally added our brand new case analysis model onto our MoneyVest platform. So that's going to be now accessible. It's deployed into production. So everybody who has access to the platform, we right now have over 500 active weekly users. So very, very excited and proud of that. So we've got, a lot of people using this on a regular basis to do the analysis, fundamental analysis on individual stocks. So now you've got case analysis where you can come down and figure out what is going to be the potential intrinsic value and the price target for whatever stock you want to analyze based on your bear case, base case, and bull case targets. And you can analyze for whatever you want. You can analyze for operating cash flow. You can analyze for net income, revenue, all that good stuff. So net income for different years, let's say 7 years. And then now you can look at the different growth rates and the margins, and it's going to calculate the fair value and the price target for the stock accordingly. For example, again, if you want to look at the net margins at 40, 50, let's see, over 50 here, and then 55. And then let's just come over to CAGRs. Let's say you want to do 20, 30, let's see, 30 and 40. And then multiple, let's say that you want to go to 40, 50, and 60. I'm just kind of playing around with these numbers, and they will update automatically here with the fair value. We've got the percentage difference, meaning overvalued or undervalued, and the compounded annual growth rate at fair value, because a lot of that is going to be dependent on the discount rate and the margin of safety that you're plugging in to your models. So again, you can use this now. It's available for all the members. It's a big announcement. We've been working on it for quite some time. Okay, coming over to September seasonality, as August is over, and in the month of August, we actually saw the markets very, very flat, except S&P 500 was higher in the month of August. So we were up a little bit over 2.2%. We're almost back up to all-time highs here. 56.48 is where we closed. The all-time high sits at around 56.69, so we're just about 20 points away from all-time highs for the S&P 500. And what a crazy month this has been, right? From the beginning all the way up until today, it's been one wild month for the markets, because if you take a look at volatility on a monthly time frame, you'll take a look at this. I mean, this has just been insane, the amount of the longer wick on the month of August here. It's crazy. At some point, it was trading at over 65, as we already know, came crashing back down to 15. So that spike in volatility, along with the longer wick on the S&P 500, is quite insane. And I wonder how many shorts got squeezed over here, how many shorts got trapped in this lower wick for the S&P 500. Quite a few. The NASDAQ actually had a very flat month. It was still up 65 basis points, but I mean, just take a look at that insane wick, right? So much momentum to the downside in the beginning of the month, and of course closing in very, very strongly. However, we're now entering the tough part of the market. This right here is the moment, the month of September, starting next week, September 2nd. That's going to be a Tuesday, I believe. That's when the markets are going to reopen after the Labor Day long weekend. Actually, September 3rd. September 3rd, Tuesday, is when the markets are going to open. And this right here, folks, is what September looks like. The last 4 times, it's been actually quite brutal. 4 out of 4 times in the last 4 years, we've seen the month of September down by an average of over 5.7%, which is not to be taken lightly. 5.7% sell-off for the S&P is actually quite an aggressive sell-off for individual stocks. So, and volatility reading on average has also been over 24.94, so almost 25. And from its current levels, volatility at almost 25 means that that's going to be a spike of well over 71%. So again, we'll find out how the month of September ends up this year, but last 4 years, very brutal. And if you come take a look at the average and the median losses, anywhere from 1.5% to as much as 2%, with a 61% probability that September is going to be red, going back as far as 13 years. And this right here is some more analysis on September seasonality, which I also broke down in our live stream. But what this is showing us is the September seasonality and pretty much all other months seasonality, going back as far as 1900s, 1950s, 1975, and 2000s. And you'll notice that September seasonality has only gotten worse. I mean, it's gone from 49% green to 43% green to 42.8% green, and now it's sitting at just over 45% probability that this month is going to be green. And if it is red, we've seen an average loss of about 1.65%, with November being the best month for the markets, especially since 2000s and 1975 as well, with over a 75% probability with an average gain of about 2%. November tends to be a very strong month for the market, and for the right reasons, because September, we tend to see the sell-off accelerate towards the end of the month. It's not really so much in the beginning. And then as a sell-off accelerates towards the end, and then October kind of leads into, ripples into October, right? That's when the markets bottom out. And then we see a very strong momentum out of that bear market or that selling pressure or whatever that correction is. And then November and December ends up being a very, very strong time in the markets. So if for whatever reason this September ends up being also a month where we are down, let's say 2 to 3%, 4%, individual stocks are selling off as well, I will be ready to deploy some serious cash. And I also want to point out that we have finally seen the uninversion of the yield curve. So we are literally at -1 basis point. This right here are all the yields. You'll notice the mortgage rates have come down to 6.35%. So very, very nice deceleration in the mortgage rates. The 15 years come down to 5.5%. That was at one point trading at over 6.5. So significant drawdown in those mortgage rates. And then if you come take a look at the shorter end of the curve, right? So we're talking 2 years and 20 years and 30 years. In other words, the longer end of the curve, not the short end, but the long end of the curve, the 20 and the 30 year, they are now increasing in those yields once again. And then if you have a look at all of these other ones, they're also increasing quite aggressively. And as a result, we're seeing that markets normalize and restabilize back down to a positive number. And that's how the curve should be, right? So shorter end of the curve should be yielding less than the longer end of the curve when it comes to interest rates, when it comes to the bond market. And this right here is nothing but a spread between the longer end, which is 10-year, minus the shorter end, a 2-year. If this is still negative, that simply means that the 2-year is a bigger number. That's why this is negative, right? So it was negative for the longest time, I think over 700 days worth of inversion. So this right here is the entire inversion of the yield curve, and it's now starting to flip back to positive. It's very, very close. In fact, it was positive just a few weeks ago over here, back in the first week of August when we saw that volatility spike. This number turned positive for a very brief moment by 1 basis point, and then it sold right back down. And now we're back almost in the positive territory. So September is also filled with a lot of economic data, as we already know. We've got inflation numbers coming out on the 11th. We've got unemployment numbers coming out next Friday, so that's going to be September 6th. And we got the Federal Reserve FOMC meeting, as well as the summary of economic projections coming out on the 18th. So it's going to be packed, and September seasonality is going to be in full swing. This is all the data that you really need to know. It's the worst month of the market, with the probability of us to see green very, very low, with an average loss of anywhere from 70 basis points to as much as almost 2% for the markets. And in most recent history, volatility has also been on average 25 in the month of September. And of course, last 4 times, we've seen pretty brutal returns from the S&P 500 as well. This is the last 4 years worth of analysis, with an average VIX reading in the last 4 years also at over 30. Now, coming over to the markets here, volatility continues to be coming down, as we've already discussed. So keeping a close eye at some of these levels. And next is going to be inside this red rectangle, of course. If the lower it gets, the more cautious we need to be. And the higher it gets, the better the opportunities will be from a buying perspective. So next right here is going to be somewhere between 11 to 12. And again, we're watching this green rectangle all the way up to as much as 30, 35, and 36 levels for volatility. Now, coming over to this chart, this is again showing us the market breadth. And what you'll notice is that we are at over 87% on the percentage of stocks trading above their 20 SMA. On a short-term basis, again, this has acted as a very important catalyst for us to keep a close eye, because this has led to a short-term pullback and a correction or a dip in the market. So it's not a surprise why investors are a bit more cautious here, considering that we are on a short-term basis a little bit more on the overbought side. But coming over to 50 SMA or 200 SMA, we're still nowhere near close to that levels. So there is still a little bit more upside left in this market, especially some more broader participation, because 76%, that means still a quarter of the market is not trading back above their 50 simple moving average or even their 200 simple moving average. So there could still be some more momentum higher, especially getting back up to all-time highs, and then expected to see a little bit of a pullback once again. Now, coming over to the markets on this chart, as we've already discussed on the 30-minute time frame, we were able to successfully, I believe, break out for the S&P 500. So as soon as this chart loads, let me just do that again. It's going to be all the way up here, I guess. There we go. So S&P 500 on the day up over 1%. So we were able to successfully break out from this resistance of 56.40. So you'll notice that we were consolidating sideways, boom, boom, boom. Validated that support here. So this is actually today. This is indeed today. So you'll notice that we came back down to that support, 93 basis points lower from the open. And then this right here is the aggressive rally, sell-off. Aggressive market rally of over 1.23%, pushing higher, and we're very close, within striking distance to our all-time high. So congratulations to everyone for this incredible rally. And again, we're very close to all-time highs, and the NASDAQ also, despite the underperformance, is also pushing higher. So let's just come over to QQQs, and QQQs, you'll notice, is once again coming up to its resistance, very much over here. That's going to be aligned roughly around 475, 476. So we're once again back inside this red rectangle. That's an area of resistance. So if you do get a successful breakout, then the next target, of course, is going to be all the way up to 487. But I wouldn't be surprised after the breakout to see a little bit of a retest, and then of course pushing right back up, and that is going to be that next target once again for QQQs. Coming over to Apple, and Apple here also moving back up slowly and steadily. However, it has been consolidating a little bit here. Had a bit of a rally yesterday, 1.4% on the day, just mostly flat and sideways. Support level is going to stay up at $207 all the way up to $236 per share for Apple. Very quickly, I just want to go over my strategy and what I am planning to do moving forward. Since September seasonality is going to be on deck, there is still a significant amount of underperformance from technology compared to other parts of the market. And then if you take a look at some recession expectations, the Federal Reserve's rate cut is coming in most likely in September 18th when they have their next FOMC meeting. And if a recession follows, if there's indication for unemployment increasing, jobless claims last week that came out yesterday were still pretty strong. Corporate profits came in very strong, and we had the GDP growth at over 3%. So there's a lot of economic indicators that are suggesting for a very healthy, functioning, stable economy. So that's good. Rate cuts in itself, in isolation, are going to be bullish for the market because that is a form of quantitative easing if it's not accompanied with a recession. And then, of course, we've got to take into account the September seasonality. So we are kind of setting up for, from an economic standpoint, we are set up for us to see that potential soft landing if nothing happens to the economy. But from a market standpoint, if we were to see any type of weakness in the month of September, my cash exposure will continue to go up, right? So I will continue to increase my cash exposure. That's the whole idea as to why I like to work within my liquidity framework of anywhere between 5 to as much as 30% of cash exposure. When I'm very aggressively buying, I can deplete my cash down to, let's say, 5%. Ideally, I don't like to go below 5%, but that's the lowest I can get down to. And if the markets are incredibly overbought and coming up to some very extreme levels and volatility readings are really low, then I can start raising some capital once again and get up to over 25 to as much as 30%, but obviously not cross 30% because I like to stay invested for the most part. So where we are in that market cycle, I would say we are a bit more on the overbought extreme side, not to a point where this is a level where the market need to drop like almost immediately or we're going to see a correction or a dip. This has been a nice healthy recovery rather quickly than what most people anticipated, and we're almost back up to all-time highs. However, we're seeing a lot of stocks trading above their moving averages, valuations a little bit more on the expensive side, volatility is low. So a lot of our readings, the MoneyVest index trading now back to over 3.9, 3.95. So it is once again indicating for me personally to start raising some cash, sell puts, sell calls to once again collect some premiums on a weekly basis. And our goal really is nothing crazy. It's about 14 to 16% annualized rate of return by long-term investing and also selling options, right? So that's our strategy. That's what we're going to be focusing on. And again, trade the market, invest in the market that you're in, not the markets that you hope or wish you are in, right? So it's really important to invest and trade based on the current information that we have in front of us and not something that we are, let's say, predicting, right? So don't predict a recession. If it happens, just buy, in my opinion. That's going to be a good buying opportunity for us. And if it doesn't, that's also fine. We're already invested and we can take advantage of these market rallies and continue to sell puts and calls and run that strategy every single week or every single month. Coming over to Apple, $207, like I already said, is going to be that support level, resistance all the way up to 230s. That's pretty much the all-time high. Amazon had a very, very strong gain on the day. Support level is going to stay up at roughly around $173 per share, with a resistance all the way up to $189. Another support sitting roughly in $166 for Amazon. Coming over to Tesla also bouncing right back up. And I was also looking at Tesla premiums. I actually analyzed a lot of stocks today for selling puts. but unfortunately there wasn't anything that kind of caught my attention. So I mentioned this in our Discord as well for everyone, that we're going to have to settle for a lower yield some weeks, because sometimes premiums are just not good enough, because we're trying to find a sweet spot, right? As I like to call it, we're trying to really dig deep and find companies, find stocks where there is hidden underappreciated value. And the way you do that is that you find a stock that you want to own for the long term. So in other words, it is high quality and you don't mind holding on to it for the long term if you're investing in that company. Second is obviously finding companies that are paying good premiums, right? So there's high demand for puts, and that's why the premiums are higher. There's also low delta. And then also you're looking at a return on collateral, which makes sense while picking those strikes. And those strikes come as a combination of both your fundamental and your technical analysis. So there's a lot that goes into picking the correct strikes. I've actually done a whole tutorial on this in MoneyVest Education, but yeah, so we ended up deciding on something else, and the ones that we sold up over 38% already. We'll be closing them out most likely next week, sometime mid next week or even later in the week. I'm also interested in Broadcom, and there's one more company, Zscaler, that are reporting their earnings. So earnings calendar for next week is also pretty packed. We got Zscaler and Broadcom. Those are two big companies that I'll be looking at. I was thinking about selling puts on both of them ahead of those earnings. But again, the premiums were not that great. Maybe for Broadcom, they were a little bit better because the 15% downside put was giving us about 30 basis points week on week, which again is not a significant amount, but it's still something, right? Annualized, it is still not bad, over 14 to 16%. So maybe we'll be looking at Broadcom only if the current put that I've sold, the current trade that I have, expires a little bit out of the money and I'm able to lock in like 70, 80%. Then I'll reload that into Broadcom with Friday's expiration. So that's going to be a bit of a gamble, but we're going to structure that trade in a way where we have a little bit of a low to modest risk for that trade as well. So that's going to be updated with everyone on our Discord for next week. Now coming back over to Tesla, support level is going to stay up at $209 with a resistance and a target up to $233 per share for Tesla moving forward. Nvidia had a very nice recovery during the day, up over 1.5%. A little bit of a doji candle, still validating this support. That's going to be very important for Nvidia. Resistance all the way up to $139 to $140 per share for the company moving forward. Talking about advanced micro devices and AMD, also support level is going to stay up at $142. Resistance all the way up to $162 for AMD, coming down a little bit from its highs, down about 8.5%, almost 9%. Again, a lot of consolidation sideways, but still, I would argue, making a little bit of a lower high and lower low pattern. So lower high, lower high, lower high. And also, of course, we got the lower low for the markets as well. So this right here is the downtrending channel right now. Talking a little bit about PayPal and Visa, and they both have actually been doing quite well. This month, PayPal was up over 10%, coming down a little bit here on the day, so down about 1%. But support level is going to stay up roughly at around $70 to as much as $68, and resistance and targets back up to $76, $77 per share for PayPal. Visa, back-to-back green days, very nice move to the upside, 75 basis points. Next target and resistance all the way up to $283 for Visa moving forward, and support level is going to stay up roughly here at $270 for the company. Talking a little bit about Meta platforms, and Meta here on the days consolidating sideways up over 60 basis points. Resistance all the way up to as much as $540 a share. So a lot of consolidation sideways for Meta. Support level is going to stay up roughly at $459 to as much as $420 per share. So a lot of consolidation. Very nice move to the upside, ever since it was trading at $80. And right now we're just moving sideways in that area of consolidation. Netflix seems to be forming a little bit of a bull flag. So we'll continue to monitor how Netflix actually trades. And this right here is the potential bull flag formation with a pole setting up that's really perfect and nice. And if you do get a breakout above this level, wouldn't be surprised to get a bit of a retest at 700, and then of course coming up to its new all-time highs once again. So there could be an opportunity for Netflix going into next few weeks here as it continues to trade inside that bull flag potential breakout pattern. Google, on the other hand, has the exact opposite pattern. So it's got a potential bear flag formation where we're starting to see a little bit of a breakdown already. So this, you can argue, is a bit of a breakdown for Google. And next target, as we already know, is going to be sitting in the 150s for Google. Microsoft also kind of completing this head and shoulders. So, we've got the left shoulder here, we've got the head, and we've got the right shoulder formation here with, of course, the neckline sitting right there for Microsoft. So time will tell if you actually come back down to retest the neckline and then of course eventually break down or not. But for now, it is very well trading inside this pattern. Coming over to N phase, and N phase here consolidating sideways, and next resistance and targets all the way up to $138 for N phase. Support level is going to stay put right over here inside this green rectangle. Very nice move to the upside for N phase from its lows of $97, pushed up over 27%. And again, long term, I do still believe that it can turn the company around if they're able to turn that profitability back up for N phase. Costco here, resistance is going to be staying put at $894 and support level at close to $872 for Costco moving forward. So hope you all enjoy this video and a complete update on the markets. We got a lot of things coming up next week, and not to mention September month is getting now officially started next week, with September 3rd being the first trading day. Magnificent 7 contribution continues to be a little bit more on the weaker side as other parts of the market continue to expand and multiples are going up for those companies. And again, if you want to get access to all the trades, all the options, every Friday I send out the alerts for options. And again, all the portfolio updates are also going to be included as well. So links going to be down below. Would love to have you on board. 16% annual discount that does expire at the end of this month. And as always, happy investing. I'll see you all in the next video.